Alright, gang, it's your boy Nature, aka Nature. Alright, so we back for another video, gang. Alright, so in this video, we're going to be talking about how to use the RSI, known as Relative Strength Index, okay? RSI is very, very useful, very, very helpful. It's another technical indicator, just like the moving average, just like the Fibonacci, okay? Just like Fibonacci extension and retracement. So RSI, these are actually the most three technical indicators that I use that are very, that a lot of people use is RSI, moving average, and Fibonacci. So how to use RSI, known as Relative Strength Index. This is in the MetaTrader 4 app. You'll see it. It's at the bottom, and you'll see the numbers. So how to use Relative Strength Index? Let's go over it. It's very simple. So a Relative Strength Index, or RSI, is a popular indicator developed by a technical analyst known as J. Wells Wider, and that helps traders elevate the strength of a current market. So it helps traders elevate the strength of the current market, or evaluate the strength of the current market. The RSI is similar to the stochastic, and it identifies overbought and oversold conditions in the market. So that's what the RSI does. It identifies overbought and oversold conditions in the market. When it's overbought, it lets you know that when a possible reverse is coming. When it's oversold, it lets you know when a possible reverse is coming. So that's what RSI does. It also scales from 0 to 100. Okay, so typically reading, when an RSI is at 30 or lower, when it goes to 30 or lower, it indicates that oversold market conditions is oversold in the market, and an increase in a possible price strengthening and going back up, or reversal, is very possible. So some traders interpret this oversold currency pair as an indication that the falling trend is likely to reverse, which means that it's an opportunity to buy. Also, reading the opposite is reading the 70 or higher. When the RSI goes to 70 or higher, it indicates that overbought conditions are in the market, and an increase in the possibility of price weakening and going down, a reversal is likely. So when it goes to 30 and you see it at 30 or lower, the RSI, it means that it's oversold in the market, and price is strengthening and can reverse and go back up. All right, so it gives so when it's at 30 or lower, it's an opportunity to buy, and when it's at 70 or higher, indicates overbought conditions in the market, it's an opportunity to look for sales. So some traders interpret that as an overbought currency pair. When it hits 70 or higher, it indicates that a rising trend is likely to reverse, which means that an opportunity for sales is very possible. So the RSI indicator, very, very easy to read. All right, so this is this is what it looks like when it's overbought. When it reaches 70 or 100, this is what it looks like. Once it reaches this line and goes over this line, a possible reversal can come back in. It means 70 or higher means that it's overbought. 30 or lower means that it's oversold, and a possible reversal could occur back up. So you can see right here, once it's overbought, price heads back down. Once it's oversold, price heads back up. So that's all it really is. In addition to the overbought and oversold indicators mentioned above, traders who use the Relative Strength Index, the RSI indicator, also look for Centerline Crossovers. So Centerline Crossovers is a movement from below any momentum or movement from below the center line, the 50 line, which is called the center line. The 50 line, anything that moves below it, the 50 line to above, indicates a rising trend. So if the movement is below it and then it rises to the 50 line and starts to rise past the 50 line, then it indicates a rising trend. Okay, a rising centerline crossover occurs when the RSI value crosses above the 50 line. So once you see price go to 30 and then goes to the 50 line, which is the center line, between 100 and 0 is the 50 line. Once it goes to the center line and starts to head towards the 70 line, this indicates that the market trend is increasing in strength and is seen as a bullish signal to get in for buys until the RSI approaches that 70 line. Because 70 line, once it approaches the 70 line or goes over it, it starts to become overbought, and price can starts to move back down. Same thing with same thing with the if it's a falling trend, a momentum from above the center line. It's going to be momentum from above the center line to the 50 line, and then below indicates a falling trend. So a falling center line crossover occurs when the RSI value crosses below the 50 line. So it's at the 70 line, and when price starts to go below the 50 line, remember the 50 line is the center line. Once it goes past the 50 line, the center line, and moves towards the 30 line, which is sales, this indicates that the market the trend is weakening in strength and seen as a bearish signal until it reaches the RSI and approaches the 30 line. So once it approaches the 30 line or goes past it, it's oversold. So how to trade using the RSI? The RSI is just like the stochastic indicator, but the RSI is better. So we use the RSI so we can use it to pick potential tops and bottoms depending on whether the market is overbought or oversold. So in this example right here, on a 4-hour chart, you can see that the market this is the 50 line right here, the 50 line right here. Price was at the 70 line, okay? In the past, price was at the 70 line. In the past, went to the 30. So this happens a lot. So, if for this example, price went to it went past the oversold. It went oversold at 30. Okay. Once it got past the 30 line, you see the 30 line right here. Once it got past the 30 line, price start heading back up, because once it gets past the 30 line, it signifies oversold, and price wants to head back up. So price eventually heads back up. It eventually goes to the 50 line, past the 50 line, goes into the 70 line, stayed there for a while. It was in an uptrend for a while before heading back down to the 30 line. All right, so this is how you read oversold. As you can see, it lines right up with the oversold. Right here, this is another indicator that you can use to find out, what direction price is going in. So that's an example of an oversold trend of Euro USD have been falling for the dropping for the couple of weeks, and has been falling about 400 pips over the course of 2 weeks. And on June 7th, it finally decided, it was already trading below the 1.200 handle. However, the RSI dropped below the 30 signal. That means that there's no more sellers left in the market, and that this move could be over. Price then reverses after it drops below the 30 level and heads back up over the next couple of weeks. So determine the trend using the RSI. This is another way you can determine the trend using the RSI. The RSI is a very popular tool because it can also be used to confirm trend formation. If you think of a trend forming, take a look at the RSI and look at whether it's above or below the 50. If you think a trend is forming, take a quick look at the RSI, and see if it's below or above the 50. The 50 is the center line. Okay, so if you're looking at a possible uptrend, then make sure that the RSI is above 50, okay? And you're looking for a possible downtrend, then make sure the RSI is below, 50, okay? So above 50 for the uptrend, below 50 for the downtrend. Okay, this is what the RSI looks like in the MetaTrader. The RSI, you'll see at the bottom of your MetaTrader chart. You'll see RSI, you'll see 70, you'll see 50, you'll see 30. This is another example of what it looks like. Price crosses over the 50, the center line. Once it crosses over the center line, price continues down. Okay, as you can see in this example, at the beginning of the chart above, we can see that the possible downtrend was forming once it was oversold at the 70 level, and it started heading back down to the 50 center line level. Between 70 and 30 is 50. Once it crossed over the 50 line, This lets you know that, to get in for sales as price continues heading back down. To avoid fake outs, you will wait for the RSI to cross below the 50. Okay, you will wait for it to cross below the 50 to actually confirm that the trend is in a downtrend. Sure enough, the RSI passes below the 50. It's a good confirmation that, it's in a downtrend. The market's in a downtrend, and it has actually formed once it crosses over the 50. Okay, so that's basically everything you need to know about RSI. It's another technical indicator that I use, that a lot of traders use. So it's found in your MetaTrader 4 app. All right, so game. In our next video, we'll be talking about resistance and support. We'll dive in more about that. I said we were going to dive in about that. I got a lot of more content for y'all, gang. So no worries. I'm going to always keep posting more and more content for y'all. So I got y'all. I hope these videos help, and teach you how to make money in the market. I will be doing a lot of live trades too, also on my OnlyFans. All these videos will, also be on YouTube. But, if you want exclusive content, more and more exclusive content, actually seeing my live trades, seeing how I trade in MetaTrader 4 is going to be on my OnlyFans. I sometimes will give the videos out for free. You can see my, what lot sizes I use and what time I trade and stuff. It's going to all be posted on there. So, I hope these videos help, gang. This is basically everything. We're going to go over support and resistance, though, but this is like, about, the summary of everything that you need to learn or need to know as far as, trading in the market. All right, so, gang, remember, don't be greedy. Stop loss. Don't be greedy. Take your trades. And, we're going to, just keep on getting better and continue, rising together. All right, so I hope these videos help. Take them very serious. Learn how to trade, so you can help your family. All right, so this is what it's all about anyhow. All right, so gang, it's your boy Nature, a.k.a. Nature.